Morning, everyone. Do this morning market rundown. Let's get into it real quick. So we got this daily time frame, 2024 year-to-date VWAP. It's been an interesting level. We haven't touched here on the S&P 500, but if we dive into the futures here, you could see here we actually tagged that 2024 year-to-date VWAP here, and we've been bouncing off it ever since. We take it into the NASDAQ. It's the same concept here. Come down right to this 2024 VWAP, and we've caught a bounce here. Just monitoring this trend alignment here. We have a declining 20-day moving average, a declining 50-day moving average over the past 20 days, and we're trading underneath this rising 200-day moving average, which you see this data will start to excel at a significant rate higher in the next, after 4 trading days. So come Wednesday next week, we move pretty aggressively on this 200-day moving average. So if we don't start to rally up over the next 6 trading days or so, this direction of this 200-day moving average will start to decline. So if we get some type of rally up in here and don't stick, we got to monitor to watch out for that decline and that breakdown in price underneath that 200-day moving average. And then from there, what we'll actually then see is this 50 moving average continuing to decline, this 20-day moving average maybe continuing to act as a guardrail. Not calling for this bearish situation, just monitoring for it, because this would be the most painful situation for most long investors, right? So if we rally up, perhaps maybe we're able to hold, and then instead of shake down, actually maybe reclaim this and then build a bigger move to get us back into that previous all-time high. That would be a potential scenario I'd be monitoring for down the road here. So we still need some time to shape up here. We're underneath the declining 20-day, underneath the declining 50. The 200-day primary trend is intact as we're trading below it, but the slope is still rising. Just noting that the data after this week starts to excel at a significant pace and trades at 12% over the next 24 bars. So just reiterating, as we drop off this data, and any new data we add will help give us an indication of that 200-day moving average down the road. So let's get back to that SPY. Just called out the year-to-date VWAP, and let's see what's going on here on the SPY. We could see here yesterday, Friday, we started to get above the 5-day moving average. Monday, we rallied up into this month-to-date VWAP. So perhaps we get some digestion here, pull back to that 3-day VWAP area, maybe undercut these stops. That could be potentially underneath this low, tag some of those stops, and then perhaps maybe that could carve out a higher low for us to give us fuel a bigger push back into that 586 region. So this is a potential scenario for the SPY, right? Let's put an anchor VWAP at this prior low here. So perhaps maybe we come back into that prior low VWAP, carve out this higher low. Don't buy the dip. We want to get strength quantifying above daily VWAP and that prior day VWAP. So potentially, maybe ideally we could get something like this and have a stop here. And the concept is, instead of buying on the break above this high, and that could be a setup here, and then you have your stop at this prior low here. But if you're buying that breakout and you're putting your stop there, it's 1.24%. If we are able to get that pullback, we're risking almost less of 0.25%. So that's a potential scenario for the SPY. And if this doesn't happen, and say we break down, we start to break underneath this 5-day here and rally back up and start to get trapped, monitor for that further decline, actually back down to that 2024 year-to-date VWAP. We talked about this already on the daily time frame as well. Got some moving average alignment potential scenario. Let's dive into this intermediate trend. So you can see here we mapped out a scenario where we're looking for price to rally back above, pull back into here, and get going. But we just rallied into that declining 5-day moving average and continued to fail. So we can see here on same story. On Friday, we started to turn, right? On Friday, the data was still in this premises. So we were adding and we were just starting to flatten out and still declining. Come yesterday, as we were adding the data here at 9:30 on Monday, right here, as we added all this data, the 5-day moving average slope started to rise. So we got this rally to a new high above a flat to rising 5-day moving average, purchased this high with a stop on the most significant high or low. Is that here? Is that here? That's your preference here. So let's see if the Qs are going to do the same thing here. Pull back to that, maybe undercut that 5-day, get back above the 2-3-day VWAP, break above that month-to-date VWAP, and perhaps we get a more sustainable bounce pushing into this prior day VWAP high. Hopefully this was helpful.